control panel to allow all attendees to hear you. This system will notify you once you begin your
Testing.
broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Testing, testing, 1, 2, 3. I just want to make sure that my audio is coming out loud and clear. So put in the questions box, just put loud and clear or okay or yes, and I'll know that you can hear me okay. Meanwhile, go ahead and please answer the polling question so we can get started. And is anybody here excited about real estate? Real estate accounting. Anybody? I would love to hear your comments on that. What your feelings are towards accounting for real estate. Okay. So it sounds like we're getting good sound, and we got the first polling question. So I'll give it another 30 seconds or so you can finish answering that. Okay. Let's see. Okay. So answer the first polling question, and we'll go ahead and get started and get the recorder starting. Okay. All right. Go ahead and close that polling question and share my screen. Okay, make sure you're seeing the right screen. No, that's not the right screen. That's the right screen. Okay, perfect. Close that, close that. Okay, so there's my QuickBooks Online, and then let's get the PowerPoint presentation. Okay, I'm gonna hit record. You're gonna hear a brief silence, and we're gonna go ahead and get started. Welcome everyone to QB Power Hour. Today's Thursday, August 9th, and this will be Real Estate in QuickBooks Online Part 1. Now, we have not written Part 2 or Part 3 or whatever it is yet, but we're assuming that it will, in fact, require multiple sessions. We'll get to that. We'll discuss that in a little bit. The agenda, we'll talk about QB Power Hours, sponsors and hosts real quick, and the CPA process. And the main content, which will take about 50 minutes or a little bit more than 50 minutes, will be to understanding the accounting principles that we're applying to real estate accounting into QuickBooks Online. About QB Power Hour, we are a webinar series, usually twice a month, Thursdays at 12 p.m. The next session would be August 23rd, and we'll be talking about the challenges around e-commerce, specifically for sales tax, multi-state sales tax, post the Wayfair ruling. So we're going to get really geek on sales tax in a couple of weeks. And then in about a month, we'll do what's new in QuickBooks Desktop 2019, assuming that it does get released that day on the 6th. That would be the actual, historically, that's the September 6th is the release date. So if we get a release that day, we'll do that episode. If not, then we may have to change topics. We usually cover about 50% QuickBooks Desktop, 50% QuickBooks Online when we talk about QuickBooks. And in some cases, we'll speak about practice management topics. Last week, we talked about value pricing, for example. We talk about third-party apps and that sort of thing. Okay, Michel Long is actually traveling. I think she's in Russia or on her way to Russia. So I hope there's no collusion going on there. That was my one politics joke for the day. So I hope that you have fun, Michelle, in your vacation. I'll see you in a couple of weeks. My name is Hector Garcia. I live and work in the Miami, Florida. And in Miami, Florida, I have my own QuickBooks classroom. We teach QuickBooks here, and we do traditional accounting services. There's my email and my Twitter handle if you want to communicate with me directly. CPA process. If you need CPE, you must attend live. The CPE will not be available for people that watch the recordings. You must be logged in for at least 50 minutes, answer at least 3 out of the 4 polling questions, and you will get your CPA certificate emailed to you in about 3 weeks. I think we're only behind one, the very last one, so I'll try to send both at the same time in the next couple of days. Avalara is now sponsoring QB Power Hour for a couple of months, so I appreciate that very much from Avalara. They're the most popular app/service, because they're kind of a service as well, to help you manage multi-state sales tax compliance. And check them out, avalara.com. On the next episode in 2 weeks, we'll be talking about some of the challenges around that, and Avalara is going to be sponsoring that content. Okay, so let's jump right into it. QuickBooks Online real estate topics. Now, I was thinking about all the possible things that real estate means in the accounting world, and it's actually different depending on the context. So if someone calls you and says, hey, I need you to do my accounting, and you say, what does your business do? And they say real estate, well, that doesn't really say anything, right? Because real estate could mean property management companies managing other people's properties. The accounting for that is so particular and specific that it's very different than, for example, an investor that buys real estate and rents or leases that property. The accounting is very different if you're a property manager doing the work for the investor that does that. And sometimes the investor themselves have their own accounting system, and sometimes they don't. Sometimes they rely on the property management company's accounting system for their own accounting. So we're going to discuss that. You also have investors that buy and sell real estate. They buy it, they upgrade it, add improvements, then they sell it. And they have most of the accounting is all about capital gain and inventory. So that's a whole another slew of techniques in terms of how do we do accounting for that. There's also real estate agents. These are the actual realtors that are doing the work on the field. And there's the real estate brokers, which are the ones that are managing multiple realtors or real estate agents, and they have to pay out their commissions. And all five of these groups are different in the ways you do accounting. If you think I'm missing a group or a type of real estate industry per se, go ahead and add it in the comments on the questions so I know that I've missed something. So I don't think that we'll get past the first one, today's session. I think that the first one is going to be deep and complex enough to overtake the whole presentation, but we'll see how far we can get. That's why we call it part one, and we'll probably have a part two or possibly a part three. So let's talk about the pain points when it comes to property management companies. One of the biggest pain points is managing your client's money, okay? Technically, you do have a liability on managing your client's money, and every time you receive a rental payment from the tenant, that's not your money, it's your client's money. And there's two ways to do accounting for it. One is, let's say, the balance sheet. Let's call it the balance sheet approach, which is where all the monies that come from the tenant and all the monies that you pay on the owner's behalf goes into a simple client's money liability account. Maybe you even have an escrow account to manage those funds, and then you make the client payouts and manage the security deposits, all that stuff. But the problem with the balance sheet approach is that you cannot generate a proper profit and loss for their clients. They can't give them a per property profit and loss. So I'm going to show you both techniques so you can see them in contrast. And I'm going to show there's two ways essentially to do property management. So let me go into QuickBooks. Let's go into QuickBooks here. Okay, where are you, QuickBooks? There it is, okay? And let's start with the premise that this property management company is going to use the balance sheet approach to manage the monies that they're getting from their customers who are the owners of real estate, okay? So the first thing is let me just go into the sales section and then customer section. And then I'm going to go ahead and create my customers real quick. It's a brand new QuickBooks file. So I'm going to call the first one Investor A. Okay, so Investor A, I'm going to create them as a customer. And let's say Investor A owns 3 pieces of real estate, okay? A building, a house, and let's say some land, okay? So I'm going to create each of them as a sub-customer or as a project, not necessarily a project. I don't like using the word project. It's a sub-customer of the customer, the investor, right? So I manage, this property management company manages 3 properties for one particular customer. So I'm going to create the commercial property, Okay, I'm gonna create it as a customer, but I'm gonna make it a sub customer of investor A. Again, investor A is my customer that owns 3 pieces of real estate that I'm managing as a property management company. Okay, I'm also going to create the next one. Just go back here for a second. I'm gonna create the next one here, and I'm gonna create where are you? Customers. I'm gonna create another customer. We'll call it house, and then we'll make house a sub customer of investor A, and then we'll click on save. And let's say we're also managing some a piece of land for them. So we'll go ahead and create that one as well. So I'm creating 3 sub-customers for the one customer that we're managing all their stuff for. So that would be that one. Investor A has 3 properties. Some we just maintain it, some we actually collect income for it. So that's kind of the first thing. Kind of the first thing that we did. Now, the other thing I'm going to do is I'm going to create a secondary customer. I'm going to call it individual customer B. And let's say that they only have one property, right? So I'm not going to create sub customers under it, right? I just have that because they only have one property that we're managing for them. Okay, so we're going to simplify things, and we have essentially 2 customers and 4 properties that we're managing. Okay, so let's start with commercial property. Okay, I misspelled that, so let me spell that correctly, so that will drive some people crazy. And so let's say for the first commercial property, I'm gonna go ahead and I'm gonna invoice uh, the customer that's going to pay the rent. Now, there's a lot of tricky things that we have to do here, because I'm going to go back into my chart of accounts for a second, and I need to have already pre-set up, I need to have a liability account for me to control or maintain all these monies that I'm receiving from the tenants. So the first thing I'm going to do is create a new account, and I'm going to call this an other current liability account. And then I'm going to call this one client money. And I like using simple names like client money just because I think it's just an easy way to understand it. So I'm going to create an account called client money. And that current liability account is everything that's coming into my business account that has nothing to do with my operation as a property manager, that has to do with the funds for receiving income or making expenditures in behalf of my customer as a property manager. It's all going to funnel through client money. Okay, so that has to be very clear there. But let's say, for example, I'm the one doing the function of invoicing in behalf of my customer to collect those funds. Okay, so I'm going to go ahead and create a new invoice here, and I'm going to create it in behalf of my customers. I'm going to come here to my investor A and commercial property, and I'm basically invoicing. I don't know why that wasn't changed. Let me go back into my customer list to make sure that's spelled correctly. Okay, for some reason that didn't take, so that's there. Save. Let's do an invoice again. Okay, so let's select that. I don't know why that's not coming in, but I'll change it there. Okay, so I'm gonna go ahead and invoice my investor A and the commercial property, and at the end, who I'm billing is not the commercial property. I'm actually billing the tenant. So this will be tenant, right? So this will be tenant of commercial property. Okay, so it's not my customer, the property owner, it is the tenant of the property that I'm invoicing. So I'm going to go ahead and invoice them for August 1st, and I'm going to invoice them for rent. So I'm going to create a new item called rent, and this is not going to be rental income. Okay, this is not going to be going into a sales account. Okay, because this is not my money. I don't own this property as a property manager. I'm managing somebody else's money. Okay, I'm managing somebody else's money. So what I need to do, in this case, I have to point this to client money. So point it to client money because when I receive that rent, that's not my money, that's somebody else's money that I'm managing on their behalf. Okay, but I can still do the invoicing as the property manager. I can still do the invoicing so I can help my client, the property owner, collect that money from their tenant. So I'm going to put here 1,500. And let's say that's it. This is exactly what I'm collecting from in behalf of my customers. I'm going to go ahead and click on save. And I did the invoice for them. So let's say eventually when I do get that payment coming in, I'm going to receive that payment as normal because I'm the one that's collecting the funds in my client's behalf. So I'm going to receive the payment for that commercial property, select the invoice, and let's say this payment came in on the 6th. I put the check number, whatever it happens to be, and then I choose the bank account that I'm going to deposit it in. So I have to make a quick pause here. Some property managers are very responsible and they'll go ahead and create a separate bank account, an escrow account, so they can receive their clients' monies and not put their money in their operating account. Okay, so in some property managers just put it all into one account, and that could be a pretty big issue. But for the most part, most people are going to have a separate escrow account in which the monies that are coming in are in a separate bank account, completely separate from the property management operation in itself. Okay, so I'm going to bring this is a recurring. I'm going to put it in the escrow account where it's supposed to be, and then hit save and close. Okay, so now I've effectively received the $1,500 in behalf of my investor. Okay, let me delete this one because for some reason I messed up with the names here. Okay, so I collected the money in behalf of my customer. Let's say that I'm also going to invoice the same thing. I'm going to invoice the other tenant, so the tenant of individual customer B, who's the owner of the property. But here, this would be the tenant, right? This would be the tenant of of this property who I'm invoicing, and I'm also going to invoice them for rent, and that's all pointing to the client money account. And let's say we're going to receive $2,000 for that one, and then we'll click on save. Okay, and then we'll receive and just correct that spelling. So I'll click on save, and then I'll receive a payment. And let's say they paid us on the 7th. Check 1, 2, 3. And that also goes into an escrow bank account. And then I hit save and close. Okay, so I've received effectively 2 payments. If I go into my balance sheet reports, I'm going to go into balance sheet. I should have an account for client money right here for $3,500. When I click on that, I should have a list of all the monies that I have received in behalf of my clients. If I click on group by and I select name, it will actually group it by customer and by property. Remember, I'm using each of the properties as a sub-customer. I'm not using the tenant itself as a sub-customer. I'm doing each property as a sub-customer. I can change the tenant information in the sub-property name later on, but I'm just doing it based on the property because it's actually much easier to manage. So we have here our escrow funds that we're managing, and this is actually it's the same principle as attorneys. Okay, there's a lot of attorneys that manage all the clients' monies, and this is the same way essentially that they're going to manage their monies. They're going to have a client money liability account that should match their escrow bank account. So now let's say that we're now going to make some expenditures on behalf of that of our customer. So we're going to go and write a check. So we're going to go to write check. Hopefully, we're writing it from the correct bank account, from the escrow bank account, because we're making payments in for our customer itself. Let's say we're going to pay Chase in this case because we went ahead and paid, let's say, their mortgage. So the account here is going to be client money again because I'm managing my client's money. On the description, I can put here mortgage payment, right? Something like that. I can put the mortgage payment. Okay, so I got client money, I got mortgage payment. Let's say the mortgage payment for this one is $1,366. I'm not breaking down principal or interest or anything like that because I am not, in fact, managing any loans or any interest expenses. I'm actually not even giving my customer a profit and loss. I'm just managing their monies coming in and then coming out. So I'm going to go ahead and hit save and close. And let's say, for example, I'm also going to write a check to, let's say, a Home Depot. Okay. And I'm also going to use, hopefully, the escrow account. And let's say I had to buy as a property manager, I had to buy some supplies to repair the property. So I'm also going to do client money. And I'm going to show you one thing that's missing out of this whole thing, which I'm going to fix real quick, which is assigning the expenses to the property, which is missing because I haven't turned the setting on. but I'm just going to finish this, and I'm going to put repairs to front door, whatever it happens to be. Okay, I'm going to go ahead and let's say I spent $67 in Home Depot. Now, one thing that I had to do is when I want to track expenses per project or per job, I have to make sure that in the settings I turn on the expenses per job uh, option, which is going to be here under expenses. So I go into settings and I go to expenses, and then I'm going to go to where it says track expenses items by customer. I'm going to click on that. I'm going to hit the checkbox to enable that feature. So track expenses items by customer and click on save. And another caveat here, you must be on QuickBooks Plus. Right? QuickBooks Essentials will not let you do tracking by project or by customer. So you have to be on the Plus version. So again, we turn that feature on, and I'm going to go ahead and make sure that I'm selecting. I want to go back to those two checks. I want to make sure I'm selecting the correct property that's related to those expenditures. So I'm going to go back in those two expenses and do that. So I paid the mortgage and I paid Home Depot, and it's all related to that property. So again, if I'm paying that money from the escrow account and not from the operating account, that is going to be, I'm going to have an escrow bank account balance that's going to match my client money balance. Now, let me stop for a second and do a polling question because this stuff is about to get pretty hairy as we do more examples of this. So let me just, before I get too excited, let me run a quick polling question. Our first, this is technically our second polling question, but you only need to answer 3 out of 4. Okay? And again, the customer is the property that we're managing, which belongs to our ultimate customer, who's the owner of the property. Remember, we are the property managers. Okay. Keith is saying, what about making the expenses billable? I wouldn't make the expenses billable, Keith, because I'm using their own money. Okay. I'm using their own money. I'm paying from their client funds. I'm not getting reimbursed for it. I'm using their own money. Okay. So answer the quick polling question, which is the one that you work with the most? So this is not the first polling question. This is the second polling question. The first one was done at 12 o'clock on the dot. But even if you miss the first one, it's fine because you need 3 out of 4. So, okay. So in this particular case, I'm a property management company that's managing funds in behalf of their clients. I'm receiving the tenant income and I'm using that tenant income to make expenditures, and I'm paying the customer at the end the balance, and that's quote unquote their customer profit. Okay. All right. So let me go ahead and close that poll. Okay. And again, I'm not going to be able to effectively, most likely I won't be able to show my customer a true profit and loss because this is called a balance sheet technique. I'm going to show you a different technique, which will be the second half of the webinar, which will be the profit and loss technique, which is a whole different way of doing it. But this is the most proper accounting way anyway. Okay. So let's say something else happens where I had to pay a contractor to do some repairs on the property. So I'm going to go to write a check. And let's say I made the mistake and I wrote the check not from the escrow bank account. I wrote it from the operating account. And this happens sometimes. Okay. The nature of the transaction doesn't change. Okay. We're still going to use client money no matter what. I'm going to type here contractor for door repair, whatever happens to be. So it's still going to be client money no matter what. The description should always explain what it is. Let's say this was $400, and this is going to go to that individual customer B, and I paid it from my operating account. So if any point in time, if I'm correctly using client money every single time I'm supposed to, but I made the mistake and I didn't pay from the operating account correctly, and this is where people get confused. And what happens when my client money and my escrow bank account get messed up? Well, only thing you have to do at this point is just do a transfer. Okay, so both lawyers and property managers have to deal with the exact same situation where they mistakenly use the operating account to pay something that belonged to the client escrow account, or they receive the money in their operating account instead, the solution is simple. Just do a transfer. So I have to now transfer that money from my escrow to my operating, because I'm simply going to reimburse my company $400 for that. I don't need to attach it to a customer. I don't need to attach it to a job. I shouldn't even need to put a memo. If I want to, I can put, paid contractor for uh, property B by mistake. Okay, something like that could happen. But this stuff happens all the time. I mean, probably one of the most common things is that, well, what do I do when I pay from the operating account instead? Just compare your escrow bank account with your client money, and always make sure that your escrow bank account matches your client money. That's it. It's that simple. Okay. So now when I actually click on client money, I'm going to click on that dollar amount, and then I'm going to group this by customer, and then click on run. Now I effectively see how much funds are available or left in my individual customer's liability account. So after I received, you see it right, really clear here. After I received $2,000 for rent, and then I paid their mortgage, and then I paid a contractor $400. The net is 234. So at the end of the month, at the end of the year, whatever whatever question, I mean whatever period that is, what I have to do is then just pay my client, pay the property owner the balance to bring that down to zero. So let's say the month is over, and I'm gonna give my customer their profit, quote unquote, on the deal. But I should probably also charge them our property management fee. That's probably the key. We have to charge them our property management fee. So that's a really important part of the whole thing. So the way we do this, and this is the different ways to do it. You can do it with a journal entry. I like to do it with an invoice. What I do is I create an invoice. In this case, I'm going to create an invoice to the property. Okay. And then on the product and service, I'm going to have an account called property management fee. And that property management fee item is going to point to my sales account, because it's the money that I have earned for collecting the funds or managing the property for this particular customer. Okay. Let me I'm going to pick this individual customer B for a second. And let's say, for example, that I charge, just to say a number, let's say I charge 10% of the rental. So I'm going to put under quantity, I put 0.2. And then on the rate, I put $2,000, which is how much rent we collect from it. Let's say 10%, not 20%. So 0.1, and that will be a $200 fee. So the description I'll put here, property management fee for August. Okay, 2018. But then this invoice is not going to be sent to the customer. It's not going to be accounts receivable. My customer is not going to get an invoice for $200. I'm going to charge it against their client money account. So I'm going to create another product or service here. I'm going to call this the same thing, property management fee. And I'm going to put here paid with client funds. So I created an item called property management fee paid with client funds, and I'm going to point that to my client money account. Okay, because all I want to do is I want to extract that from that, and then I'm going to make this negative $200. Okay, effectively making the invoice zero. So again, this is the property management company finally getting paid or collecting part of this of the funds from the rental income, so to pay themselves the monthly property management fee. And I'll typically just copy that description. Remember, that description is what shows up in reports, so I'll copy that down. So this is the invoice that I do to collect my property management fee as a property management company, and then to reduce it down to zero for the money to come out of their client money account. So I'm going to go ahead and click Save and Close, and I'll close that. And then once I go back into my balance sheet, and then I'm going to group this by property. Now my customer effectively has a leftover profit of $34. So this is the report I would give to my customer that shows you received $2,000. Okay, and then I paid the mortgage, I paid the contractor, and I paid my property management fee, and at the end you have $34 left. So what I would do at that point, I will write a check, this time to my customer. So I'm going to pay it to my customer B, and this would be client money, and we'll call this one August payout. Okay, I have to make sure the customer is selected here on the right hand side as well to the same property, and then the amount in this case will be $34, and I will be paying that from the escrow bank account. So from the escrow bank account, I'm going to pay my client the leftover profit that they had on that account. So I'm going to go ahead and click on save and close, and then when I group that by customer again, we should now see that their client money account should now be zero. So that's how we managed. This is the balance sheet method, which is different than the P&L method, which I'm going to show you, which is much different. With the balance sheet method, we used a customer and sub-customer to track our customers on the property. We brought all the money that came from tenants into client money, all the expenditures that we made on the client behalf to the same client's money account, and we invoiced them for the property management fee, and we zero it out against the same balance. If for whatever reason the situation would have been different, so I'm going to show you a different example. So I'm going to delete this check for $34, and let's say the situation is different, where, and I'll zero out this invoice for a second just to show you. I'm gonna just, let's say 234. Let's say that our fee for property management is $260. Okay, but they only have $234 available in their bank account. So if that's the case, then what I would do is I would in the invoice, I will charge the invoice our amount. So let's say that was $260, but they only have $234 available in their escrow account. So in here, I'm going to put negative 234. Okay, because that's how much they had left. And I'll put here available balance or something like that. Okay, so I have 234 is what I'll be taking from the account itself, and I'll leave the balance as an open invoice, and then I actually invoice my customer for the $26 because they have to pay me in order to bring that account back to zero. So that's a really important point. But if you don't want to bring that account down to zero and you want it to be negative, which is okay, you would put there negative 260, make the invoice to zero, which is fine. But then just keep in mind that the running balance of that, let me just go back into our customer here. You just keep in mind that the running balance of that account is now negative 26. So you're definitely going to have to next month pay him $26 less. So this will hopefully roll over. But for the most part, I don't like to ever have negative balances in the client money account because it causes a problem with the actual escrow bank account, right? So we have to deal with that. Now, there's another step here that we're missing in the process, which is, we're doing all this, but now we run into a situation where our escrow bank account has a different balance than our client money bank account, right? And the reason why that happened was because, remember, we took $260 out of the client money account to earn our income, but we haven't actually transferred it to the operating account. So at that point, I just do a simple transfer. And this is the part where people get tripped up, where they overthink the transfers. This is just a transfer. It's nothing beyond that, right? This is just a transfer. I don't have to put a customer name. I don't have to tie it to any invoice. None of that stuff matters. It's just a simple transfer, and I'll just go and take the $260 from the escrow to the operating because I've earned it because that was my monthly fee that I've earned. Okay, all right. So one question here I'm getting is how do you deal with sales tax? So James, this is a tricky one. If I'm gonna also manage the sales tax in behalf of my client, like if I'm the one who's gonna fill out the form and remit the sales tax, I prefer to use the profit and loss method, whereas I use the balance sheet for other things. But in this case, if my client, the property owner, is the one that's managing sales tax, I collect the whole thing, including the sales tax, and then it's just my It's just the property owner's prerogative to deal with that. But in this case, again, we're doing the accounting for a property management company that's managing multiple investors. Okay. All right. So I have a few questions about transferring the funds from the bank account escrow to the operating account. So I think I answered it. So if I didn't, go ahead and ask the question again. But we had like 3 or 4 people saying, "What about where's the money transferred from escrow to operating?" I think I answered it. Okay, all right. So 2 people saying you answered it. Okay, that's good. All right. So this is the reason why this is called the balance sheet method is because all of the activity pertaining to the property is going to be inside of the client's money account, income, expenses, all that stuff. And then when I pull my profit and loss as a property management business is simply just to track the income and expenses of the property management operation, not of the expenses related to the property, because those are all dealing with client funds. Okay, so scratch that, and you have to unlearn everything you learned and just reset the cassette here, and we're going to talk about the profit and loss method of property management, which is much different than anything else that I have shown you. So number one, the profit and loss method of property management is used with classes. I only do classes. This is just the only way I like to function. So I'm going to go into my account settings, and I'm going to go ahead and turn on classes. So I'm going to turn on class tracking and hit save. And again, this is you need Plus, right? QuickBooks Online Plus is the only one that works with this. Now I'm also going to go into my chart of accounts, and I'm going to be very particular about the chart of accounts I'm going to create. I'm no longer going to use the client money account anymore. It's there, but I'm no longer going to use it. What I'm going to use now is other income and other expenses to track my client's profit and loss. So I'm going to create a new account, which will be an other income. Okay. And then I'm going to call this rents collected. Okay. So I'm creating an other income account called rents collected. And again, same situation. I'm collecting rent in behalf of my customers that own the real estate. I'm managing the property. I'm making their expenditures. And let's say, for example, there's no escrow account. I'm going to skip the escrow account. And at the end of the day, I'm going to pay my client the same thing. I'm going to pay them their profit, but I'm going to manage it through the profit and loss instead of the balance sheet. So I'm going to do rents collected, and I'm going to do save and new. I'm going to create another other income account called other fees collected. Okay, so this is whenever we're going to charge the tenant a late fee or a pet fee or whatever it happens to be. So I'm going to go to save and new. Now I'm going to create an other expense account, and I'm actually going to group my other expenses into 2 categories. I'm going to call it property operating expenses. So I'm creating one major category called property operating expenses, again, as an other expense. And I'm going to create another one called balance related expenses. And I know this actually doesn't make a lot of sense, but trust me, this is pretty much going to be the name that we're going to give it. I'm going to give this name to what will be my client's balance sheet transactions. Now, this detail type doesn't matter. Anything you put there, it doesn't matter. Somebody asked me, the other one said dividend income. Don't worry about that. This detail type was like someone into it decided to play a back joke in all QuickBooks users and say, we're going to add detail type just to annoy you because it has absolutely no value on any of our work, this detail type. So just ignore it. Don't worry about it. Sorry, that's there. I wish I could just get rid of it, but I can't. So don't worry about detail type. Only worry about account type and the account name. Okay. So I'm going to click save and new. Now I'm going to create the subcategories under other expense, which my client normally wants to track. Okay. So normally our client wants to track things like property, let's say property repairs. Okay, that's one of them. And we'll make that a sub account of our property operating expenses, right? Again, these are all other expenses. property repairs, property other operating expenses. I'm going to hit save and new. I'm going to create one called management fee. This is the fee that they're going to pay us. And this is going to be this is going to be property expenses. Property related expenses. Yeah, I'm not going to create all of them here, but I'm going to create the more common ones. I'm going to go to other expense, and I'm going to create mortgage interest. Okay, and that's going to be a sub account of property operating expenses. Okay, I think that's good enough. That's enough categories under there. Now I'm going to go into other expense, and I'm going to create the subcategories of my balance transaction. So this is going to be mortgage. In this case, would be our mortgage principal. Okay, mortgage principal, and I'm making that would be it's called hold on, balance. Yeah, balance related expense. Then I'm going to create a new one, and bear with me. This is like watching paint dry, I know, but you're going to be able to watch the recording later on, and this is all going to make sense because you do have to watch the entire methodology in this case. The other one is going to be called property improvements. Okay, and that's also going to go under balance related expense. Save and new, other expense, and I'm going to do the last one called security deposits. And I'm going to make that a balance sheet, a balance related expense, and save and close. Okay, so let me preview the chart of accounts real quick so we know exactly what's going on. So to manage our clients' properties as a property manager, our clients' properties, we are going to we're going to use all our other income and other expense accounts. So we have other fees collected, we have rents collected, we have our balance related expenses, which are really the expenditures we're making in behalf of our client that would affect our client's balance sheet. Does that make sense? So I'm putting in there what is affecting my client's balance sheet. So my principal payment, my property improvements, my security deposits would affect my client's balance sheet, only my client's balance sheet. And then the operating expenses is what would affect my client's profit and loss, right? The management fee they pay us, the mortgage interest, the property repairs, utilities, that sort of thing. Okay, so and then rents collected would be for collecting the tenant's rent, and then other fees collected would be to collect additional fees from our tenants. So now let's see how this operation will look. So I'm going to create a new invoice, and I'm going to go ahead and invoice my customer, my investor A, the house. Okay, and I'm going to create another item called rents collected. And now this rents collected item, which is a service item, is going to point to my rent collected other income account. So I'm using the profit and loss for this, okay? So I'm doing this, the rent collected other income account. I'm gonna go ahead and hit save and close. Let's say this is $2,500. And let's say at the same time, because it's the first month, I'm also collecting 2 months of security deposit. So I'm gonna put here security deposit. I'm like the worst speller in the world. Okay, it's a service item, and that's gonna go into my security deposit balance related other expense account. Okay, I'm gonna hit save and close, and then I'm gonna put here $5,000. Okay, all right, and then I'm gonna go ahead and hit save and close. So I invoiced the tenant for that. Let's say in the process, I'm also gonna make some expenditures. So I'm gonna make some expenditures in behalf of my customer. So let's say, for example, I went to Home Depot again, and I'm gonna use my repairs expense account. So I should have a sub account under property, other operating expenses for the property called property repairs. And I can call this one window cracked, whatever you want to put there. And let's say this was $240. And then the customer in this case is important, but it doesn't matter whether you get this one right or wrong, right? Because we're going to use classes. Classes will rule the world in here. So in this case, the classes, I want to make it the same, pretty much the same as my customer, just to simplify my life here. So I'm going to create a class that is equal to my customer structure. So I'll create investor A, and then I should do house. Okay. I don't know why I can't do a subclass, but I'll just leave it at investor A for now. Okay. Just do, where is my expense? Sorry, I closed it by mistake. So Home Depot, this is property repairs. We said window cracked. And I'm going to use my class investor A and my customer job house. Again, I can skip the customer, and that was $220. I forget that this the last dollar amount that I used. So my class is the property that I'm managing. The customer job, again, you should use it, but that could be skipped. It's actually not a huge problem if you skip it. Okay, I'm gonna go save and close, and let's say I'm gonna pay now Wells Fargo. Okay, and I'm gonna pay the mortgage in my client's behalf. So I'm gonna go to mortgage principal, and I'm gonna break it down for them. Okay, so I am gonna break down principal and interest in this case. So let's say that's $1,450, and then I'm gonna pay the mortgage interest, and let's say that's $250, and these two things are gonna hit my investor A class. Okay, again, I'm gonna pick the customer job just so I can have tracking of the specific property, but this is all 100% class driven. I'm gonna go ahead and hit save and close. And then I'm gonna run a profit and loss. I'm gonna go to reports, profit and loss, and then I'm gonna run a profit and loss by class. Profit and loss by class, and then I click on run report. And then the part that you wanna pay attention to is that if you look at my regular profit and loss, my sales, my expenses, this is all zero just because I haven't tracked any sales and expenses for that one property for investor A. But when I come down here, I can actually effectively give my customer, oh, I forgot to put the class on this invoice. Let me go back and do that real quick. Okay, investor A, sorry, I had missed the class here at the beginning. So I'll go back to the profit and loss by class, and then we can effectively give my customer a profit and loss, right? I can just export this to Excel, remove the stuff that I don't want to see, or I can just come here to customize and go to filter and go to class, and then I can simply select investor A, and I can go to, if I want to, and go to distribution account, and where it says other, all income and expense accounts, I can actually just come down here and only select my other income and expense accounts manually, and you can always just save that report. So I'm using other income and other expenses to track, let's call it an alternative balance sheet just for my customers. And when I click on run, I can effectively give my customer a balance, a profit and loss, and so it's sort of like a combined profit and loss and balance sheet for the property. They see the rents that they collected, right? That's a positive number there. They see the principal that they paid. They see that they owe them $5,000. So in this case, they have a liability, right? Because they received a security deposit, and they have their expenditure, and then they have their property repairs. And then at the end of the day, the property itself is going to have a net income. And because I'm not going to be managing the deposits, for example, in behalf of my client, in behalf of the owner of the property, I'm going to always pay out the owner of the property everything that's sitting on the net income side, on the other net income side. So I'm going to write them a check for that amount. So I'm going to do that real quick. So I'm going to write a check. Okay, so I'm going to write a check to investor A. And this would be an account that I haven't created yet. I'm going to call this one investor payout. Okay, you can call it owner payout. And I make this an other income account. Again, everything that's other income and other expense, I do 100% related to the property. In other words, other income and other expense becomes a new client money. But I do it just so they can see a report that would make much more sense to them. And let's say I'm going to pay them 5580. I forget what the exact dollar amount is. I'll go back and check and select the property and select the class, and then hit save and close. And now that should be zeroed out. Okay, so when I give my, let me go back into that report, make sure that I'm not showing filters. Where's my class? Class, I only want to see investor A, and click on run. Okay, so when I can give this report effectively to my to my uh, to my customer, and they can see the investor payout, right? And that investor payout will be after I pay them out, but then they can see all their sort of P&L and balance sheet combined items all in one shot. Okay, so I wanted to show you that, and again, this is when we as a property manager never hold any money. We as a property manager don't manage sales tax. We as a property manager don't manage security deposits. This is where all we do is collect the money and remit it back to our customer. And then our regular profit and loss. So when I look at my regular profit and loss, okay, my regular profit and loss. So when I do profit and loss by class, my regular profit and loss on the not specified section, or if I create a class called property management, then I can just run all my regular income and expenses that pertain to my property management business. And because I'm zeroing them out at the end of the day when I pay out my investors, it's not going to affect my total profit and loss at the end of the day. Okay. Somebody else is asking, what about charging the property management fee? Okay. Yeah. So yeah. So the way that would work is, and thank you for pointing that out. Let me reduce the investor payout. I'm gonna reduce it by 580. I'm just gonna assume for a minute that our property management fee is gonna be 580. So I'm gonna hit save and close here. So that will work the same way. I would create an invoice. Okay. I would charge the property. I would go property management fee. Okay. I'm going to have to create another expense account called property management fee paid by customer. So paid by customer. So I'm creating an item called property management fee paid by customer, but I'm going to use my other expense account called management fee, right? So I can charge it to their P&L and hit save and close. And this was, let's say, 580. And then negative 580, and then hit save and close. Make sure I have the correct class in this case. Hit save and close, and then I'm gonna go back into that profit and loss and just make sure this is all sorted out the way it's supposed to. Run this by class, okay, and then go to customize, filter, customer, not customer, class. Pick the specific class, and then distribution account. I'm gonna select only my other income and other expense accounts. Okay, so that allows me to filter out only the accounts that I want to see. And because they're all other income, other expense, they're really easy to find. Okay, so there's my P&L for my customer, right? There's my rent collected for 2,500. There's my 580 property management fee. Okay, there are the mortgage interest that I paid on their behalf, their property repairs, their principal, and I just group what would be my customer's balance sheet items separately. And I do this really to help the accountant of the property manage or the property owner, if the property owner doesn't do any accounting, but the property management company is. All right, so let me run a third polling question real quick, and then we have a lot of Q&A here, so I'd like to see if there's any answers that I can answer. There's a lot of questions here, and by the way, this is obviously this is not necessarily the most kosher way of doing an accounting. This is the workaround I've come up with based on the fact that QuickBooks is not really designed to manage real estate and manage other people's money. QuickBooks was never designed to do that. So that's just the best I could come up with in terms of that. Um, and on this report that I had just shown, let me wait until the polling question closes, because somebody is telling me where's my own income. That's because I did a filter on that report. So let me wait until that the polling question comes up so I can show you on the screen. Okay, so we have about 90% of the votes. I'm going to leave it up for another 30 seconds. Okay, and then I'm going to go to close poll. Yeah, so we're going to have obviously there's more parts coming because this is not enough really. It's hard to cover. But if you're managing real estate, if you own the real estate, it's going to be different because you don't have to deal with other people's money, and you have to depreciate the property, and it's just a lot different. But see, there seems to be some interest on it. Not doesn't look like there's enough people saying this needs to be in 2 weeks right away, but it's something we can start putting together. So let me answer a couple questions. One is, how does your own income show on your profit and loss? So let me pull up a profit and loss here, and I'm going to group it by class. Okay, and let me make sure that in this case, where is my okay? So on the invoice itself, this is the key element here. On the invoice itself, where I was invoicing my customer, I will use the class Investor A for the fee that they paid, but I have to use a different class. Let's call it the PM class, the property management class, to manage my own income. Okay, so anything that has to do with my own income as a property manager, that has to go into its own class or no class. And then what has to do with taking money out of the client's profit and loss account, it will go into their class. So that's actually a really important component of here. And forgot to mention that earlier. This is the reason why we do classes and not customer jobs, for the reporting purposes. Okay, so it has to be class. It can be locations. So it has to be class. It can be locations, because we need to be able to do one class per line item. And I can use customer jobs for this case, because I will have at least one transaction that would have multiple classes, such as this one. So I have to use a different class for my own fee. So when I run my profit and loss report and I run it by class, the only P&L that really matters to me is the P&L for property management for my own business, because the P&L for investor A, it's only for their own purposes. Now, because I zero it out on the payout. At the end of the day, if I really wasn't looking at this by classes, if I was looking at total only and I click run report, my P&L will still show the correct number no matter what, which is 580. That's the only part that we have earned as a property management business, right? Because everything else would get zeroed out on the other income and other expenses. See, I can just collapse other income and other expense, and it all zeroes out at the end. So I'm really not too concerned with how this is going to affect my own profit and loss as a property management business, because I'm making sure that I'm zeroing this out when I make the payouts to my customer, and I'm making sure that I'm charging everything correctly. If I wanted to really break it down, I can do a profit and loss by classes, and then I can go to customize and only show the class for the property management. That way, I'm ignoring essentially all of my real estate customers, and I go to PM, and then this would be my own internal P&L for my own business that I'm managing. Okay, and this is why it gets a little bit tricky. So one question that they're asking, that Colleen is asking, how did you get your 580 to zero out? I put it as a negative line, and I use a different class. Okay. Um, all right, so I think I don't think I'll have answer. I'll be able to answer all the questions. Let me run the fourth polling question for the folks that get the CPEs, and then I'll show you. Actually, before I do that, let me do a slide first. So give me a minute. I'll run the fourth polling question in a second. Okay. So just a recap. Um, we actually just covered the client payout, escrow, client money, and we covered the client P&L versus the property P&L. We didn't cover security deposits in detail, but it will work the same as client money. So the next sessions would be real estate from the perspective of the investors that own the property, rent it, and they have their own situations they have to deal with. So that will be part two. We'll talk about real estate for investors that flip properties, and we'll talk about agents, and we'll talk about brokers. So there's definitely plenty of topics left on real estate. And I think that's why I've never tackled real estate before, because it was such a big topic. So in 2 weeks, I'll give you a minute, 1 minute. I'll give you that. I'll put the last polling question up. In 2 weeks, we'll have e-commerce and sales tax challenges post Wayfair ruling. So we'll talk about the complications of sales tax with e-commerce companies with multi-state, and we'll have Avalara speak to us a little bit about the solutions that they have. Then September 6th, we'll do what's new in QuickBooks Desktop 2019. Crossing my fingers that it'll be out by then. I also recommend to check out my podcast. It's called Art of Advisory. You can check it out in Facebook. We go live every Tuesday at 12 p.m. and it's also in iTunes and all podcast formats. And I also like to invite you to join my value pricing webinar. Okay, well, I'm doing a value pricing webinar on Thursday, August 30th. The website is valuepricing.net, easy website. It's a $300 3-hour webinar, and use Power 50, $50 off before August 15th. Now, if you don't know anything about webinar, I tell you this: if you have faith in the content that I provide and you think you'll be good, I'm sign up for it. I'm giving 100% money back guarantee for anyone that takes the webinar and doesn't like it. So check it out, valuepricing.net. So let me run the last polling question, and we should be done once we get these answers. We should be done, and we can wrap it up. Meanwhile, I got some questions that says, why do you recommend classes over customer jobs or locations? So Susie, let me reiterate. The reason why I don't like locations is because I can't choose more than one location per transaction. Okay. And the reason I don't like to use customer jobs or customer sub-customers is also because I may have one particular transaction in which I want to hit multiple classes, such as the invoice that I was blanking out. Now, if I was using a journal entry and not an invoice, I could have done it just with customer jobs without having to use classes, but I really do recommend classes are the best thing to do. So it'll be the most flexible. It will give you the best reporting capabilities. Okay. And yes, Heather, I will be recording this and posting this to YouTube in a few hours. Let's see. Looking forward to the next session. Great. Appreciate that. There's a whole bunch of questions about managing land. Dominique, I don't know. Maybe you can email me. I don't think I can answer that in 30 seconds. Let's say you think there will be a challenge during an IRS audit if you have a P&L that contains all the prop. When you do the tax return, you're not gonna include those classes in your tax return as a property management business anyway. So I don't think the IRS will have an issue. I mean, if the IRS doesn't understand, they just explain it. The balance sheet method and the profit and loss method that I'm showing you, they're just presentation methods for showing the information to your customers. I don't think any of them really change the net income or anything else like that. Somebody says, any progress recovering your YouTube channel? So yes, just in case you didn't know, I got my YouTube channel back. It was taken away for 4 days, and I got it back 4 days later because a lot of people were active in Twitter and Facebook and letting YouTube know that they made a mistake, and they effectively turned my YouTube channel back on. And no, they did not tell me why. they never explained the reasons why, unfortunately. So the webinar is over. I'll tell you my YouTube backstory if you want to stick around. I'll tell you the whole story with YouTube. Let me end the webinar here. Let me close the polling question, and I'll finish it here with the last slide. Thank you, Avalara, for sponsoring QB Power Hour. We'll be talking about Avalara in a couple of weeks. Make sure you check out QuickBooks Connect in November, biggest QuickBooks conference in the world, and continue the conversation in our Facebook group. Just search us QB Power Hour. So if you want to stick around, I'll give you my quick story that I have with YouTube. So the webinar's over, okay? Webinar's over, and I stopped recording.